This is not financial advice, not legal advice, for entertainment, educational purposes only, and anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. Listen, the market is crashing. And while this is bad for our portfolios, one of my portfolios, I'm down like 13,000 in pre-market. Okay, so don't think that I think this is a good thing for retail investors. This is a horrible thing for retail investors. But for all the bad actors, for all the institutions that are 10 to 1 margin call, 20 to 1 margin call, 50 to 1 margin call, guess what? They are in trouble right now. They are in trouble because their portfolio is down 10, 15%, and 10% when you're 20 to 1. You got a margin call. You got the phone call. Not saying they picked it up, but they got the phone call. And that's the same thing that was happening with Archegos when Archegos went down. Archegos got the phone call, but Archegos didn't pick up. And they allowed the entire portfolio to crash because of it. Okay? Because they could not make margin. And that's what I believe is happening with a lot of these institutions right now, with the market crashing the way it is. A lot of these institutions are not able to make margin. And then it has like a double effect. And here's why. These guys can't make margin. What happens? They have to find cash, or you have forced liquidations. So then you have them selling the shares in companies that they like or that they're long on at these reduced prices. And then what? When the liquidity is gone, the forced liquidations, then they're going to start being forced to start closing out their short positions. And that is what's going to, in my opinion, bring a lot of these bad actors down. Because we know that they like to naked short companies, but a lot of companies that are losing money right now, they are long on. Companies whose stock price is crashing right now, a lot of these bad actors, these naked shorters, they're long on these companies. So their margin requirements is going through the roof. And if they can't make margin, it's usually forced liquidations. The only thing that's going to save them right now, and save them is not the right word, kick the can down the road a little bit for them, is the relationships. They've been robbing and stealing for each other for the last 20 or 30 years. So even though they should get margin call, they're going to get a break. They're going to get a break. They're going to give them time to try to find that money. Give them time, hoping the stock bounce back. But here's the thing. When you start drowning, self-preservation kicks in. And these banks and these prime brokers are not going to go down with the naked shorters. They're not going to do it. Okay? They're not going to do it. They will act like they support them in the beginning of this fiasco. But when it gets really dire, when this gets really dire, the prime brokers are going to ask for their money, regardless of the relationships that they had in the past, because the banks are not going to drown with the naked shorters. The prime brokers are not going to drown with the naked shorters. So I believe, while this is terrible that the market is red like this, I believe that a lot of the naked shorters are getting margin calls. The calls probably already went out. And if they can't find the cash, which I don't think they will, they're going to have to start selling shares that they're long on at these reduced prices. And then hopefully, they'll be forced to start closing out their AMC and GME naked short positions. and then AMC and GME could start going to the moon. Anyway, please leave some comments. Tell me what you think. Do you think the market crashing is having a negative effect on the market, on the margin calls of the naked shorters? Anyway, have a great day. God bless, and I appreciate y'all on this journey with me.